I probably have to unmute myself. What's up? Anyways, I didn't know you could get up this early. Welcome. So here we go. Obviously, this is just the pregame. As many of you know, it's kind of like the one of our trademarks of what I do. I always take the opportunity to try to teach something. And of course, we got a market that is in trouble. There's a lot of bad stuff happening. Okay, there's a lot of things that are going to take us down the road of probably destruction. Okay, again, it's not a surprise. I hope nobody's surprised because we've talked about this at length for a very long period of time. That you cannot keep trying to borrow your way out of debt. The market footprints will eventually show, and I think they're showing in spades. Especially when you take a look at Walmart and you take a look at Target. Walmart, you would be pretty shocked to see a drop of 30%. Okay. That's a pretty nasty drop. And, it's funny. My son asked me, who's financial advisor, would I be a buyer yet? I said, no, not yet. I'd be certainly looking at a point, but I would certainly want to see the bottom come in before I'd be a buyer, or unless I was hedged it, then I wouldn't care. And I'd actually be happy about the big drop. But there are so many signs out there that are leading us down the road to disaster. And again, I don't think anybody should be surprised at the market action, because if you are surprised, I think you're making a big mistake. And I don't think you really understand how markets work. Okay, because markets themselves work on price discovery, on price action, and what is the fair price of exchange. And certainly, if you look at, let's use Walmart for example as a individual stock, what is Walmart's biggest problems? They can't get goods, so they can't sell the goods because they don't have them. So there's no way that they can make their profit targets. All right, to couple that with their payroll costs, which have risen, 40 or 50% in the last year. So less sales, higher costs to do the less sales. What does that mean? It means not a pretty picture. But if we look at the more general, the old time things that we look at to judge a market, the S&P, the S&P is going down. It's in a downtrend. It is ugly. Okay. I mean, look at it with whatever way you want, but it is down almost 20%. Okay. The NASDAQ is down almost 30%. Okay. Are we surprised? Is anybody here surprised by those numbers? I'd be curious if you are. And again, don't be ashamed. If you are, then say so. We'll tell you why. But, nobody should be surprised if you've been with me for more than 2 weeks. Okay. Because again, we knew that this was the inevitable at some point. We don't know when. I can't time to the day of when it's going to happen, but you could certainly see the overall price action and what it was telling you. And what is it telling you? It's telling you that the market's in a lot of trouble. Okay. And a lot of trouble is what? It means that we're probably going significantly lower, and which is fine too. I mean, look, it is what it is. We're not going to be able to change the direction of the market. Okay. And at this point, can you tell me, is there any reason we should expect it to change anytime soon? I mean, what could possibly turn this market around today? Well, obviously we're close today, but what could possibly turn this market around in the next week, next month? Okay. Is gasoline prices going to suddenly drop back down to where they belong, around $2 to $2.50 a gallon, instead of $5 to $8? Okay. Is the supply chain going to magically get fixed? Okay. And supply, is the potential food shortage that we're almost certain to have going to get fixed? Well, the answer also is no. So why should my expectations be any different? Now, the market signaled long ago that it was in trouble. Okay. And I think this is where many fail to recognize what the market is telling you. But because the market leaves a footprint, okay, because the market trades and shows you where the price discovery is taking place, why would anybody possibly be surprised? Again, we look at this here. Let's look at it, even if you look at it on a weekly basis. Okay, where was the sudden shift? Okay, well, the sudden shift came right here. The inability to break out from here started the downtrend. Okay, now what we didn't know it here that it was a downtrend. Okay, when did we know it was a downtrend? We knew it was a downtrend right here. Here's where we knew that the prices were headed low. Okay, we couldn't have picked the top, but we don't try to pick tops. One of the reasons that we hedge is we don't have to worry about tops and bottoms. We are always protected, and we have a formula. But from a trading standpoint, the surprise should be to none. Okay, that the NASDAQ is now down 7 weeks in a row. Okay, and probably be 8 next week. Now there will be a rip your face off rally at some point. Okay, but does that turn the market to a bull market again because there's a rip your face off rally? What do you think? Correct. It does not. Okay. Listen, we don't trade on fundamentals from a trading standpoint. We understand the fundamentals of the market. We understand the fundamentals. Excuse me. We understand the fundamentals. We understand, but we trade off the technicals, and the technicals are going to be well ahead of the fundamentals. Okay. And the technicals were telling us weeks ago. I mean, this goes back to last year when we actually peaked. Okay. And the technicals were telling us a long time ago that we were peaking. Okay. And so it should be a surprise to no one that we are headed south, and probably much more. I mean, I think, the number is 40 to 60% lower. Now, I think it might even be worse than I think, because, you never can put a number on it exactly and be confident. But my original call was 40 to 60. Well, the NASDAQ is already at 30. Okay. And there is no hope right now for the NASDAQ. Now, again, hope will eventually come back, and there will be, new developments, there'll be new stuff, and the money will be flowing freely. But with what we have going on now, that is not the case. But again, forget about what my opinion is. The information is playing out right in front of you. Okay, you can see it in any chart you want to choose. It's playing right for you. There's the Russell. Same thing. Now, not as drastic, but the same thing. Peaked around the same time, and it's done nothing but go down since. Okay, the Dow peaked around the same time. Okay, and has been the strongest, but still headed south. So when the Dow is the strongest, is that bullish or bearish? It's a bear, because the Dow is the old standby. The truth of the matter, I don't even know why we still have the Dow. Okay, I mean, it's a crap index anyways. It's only 30 stocks, and it's not even yet. We don't have the industrial age anymore. It should be the Dow Tech average. But anyways, that's where people run to. That's the first play to safety, right? Which is not safety, but that's their first play. And you can see that happening because when the spread between the S&P and the Dow begins to narrow, that is telling you that there are more sellers out there, and there are more people trying to sell this market, either liquidating their positions or trying to short the market. Okay. And you can see that, the Dow right now is trading at 31,200. So that's 15,000. It's $15,665 of total value. The S&P is trading at, let's say, 3,900, we'll just do even, which is $195,000. Okay, so there's a $30,000 spread, but just a few weeks ago there was a $50,000 spread between the two. So the spread is collapsing. And if you go back to 2008, the Dow actually at the bottom was more valuable than the NASDAQ. Okay, they actually inverted. And again, that could happen again. Listen, we don't know to a certainty. The only thing we can know for certainty is we can look at the footprint of the market, watch the footprint, and make a judgment based on that footprint. Because at the end of the day, price action rules, price action tells us everything we need to know. Okay. Is it a guarantee 100%? Absolutely not. But if you're using the correct methods, then it doesn't matter. You will catch the much bigger trends, the much longer trends. And those who trade in the portfolios, how long have we, other than one brief 2 or 3 day period, how long have we been long oil now, crude oil? Okay. Almost a year, maybe longer. Okay. Now we had one brief short, but overall, we've been net long that thing for almost a year and maybe longer. And in 2019, we were long the NASDAQ for almost a year. So again, don't fool yourself by thinking that you can A, predict, and B, look at the stupid assholes on the news, okay, who make these ridiculous claims to get ratings, not to teach you. Okay. We can hear all the nonsense we need. Just turn on any pundit. Not one of them gives a rat's ass about you. And basically they're playing for ratings and their own job. And they don't understand markets for the most part. Now, not every single one, but more don't understand than do. Okay. More do not understand than do. And so they're just feeding you a line of crap, and they're bringing in what? They're bringing in their experts who are feeding you another line of crap, because most of them they bring on are really just trying to raise money that really don't even understand the market. Ask them to read a chart. They probably couldn't even read the chart. Okay. So they don't understand the footprint either. Their job is to raise money. Okay. Because they raise money, that's where they get paid. Do you think they really care about you? Okay. They care about their commission check. That's what they care about. Okay. So we look like we're in trouble. And again, go look at the tech stocks. You don't have to look at the indexes only. Look at Apple. Okay. I mean, this is breaking down to the downside. Okay. It was up to 180. Now it's under 140. Okay. AMD, where are we at? It was up at 160. Now at 90. Those are not small numbers. Facebook, was up at 380. Now at 193. Okay. So, those are not small numbers. And that means there's probably more room to go. The overall exuberance, or what Alan Greenspan, another mutt, claimed, the irrational exuberance of the internet bubble of 2009 or the 90s, is it any different today? What was it any different during the height? No. We went up every day. You could never sell them because they were going up. Okay. Waiting for the rip rally week after week reminds me of the free beer and Roger. Oh yeah, how about the free hamburger? But we did have a couple of rip your faces off rallies in the market, not the real ones that we'd really like to see. But yesterday's last hour was pretty much a rip your face off. It certainly ripped us off a little bit, but again, that's part of the business. We know it's coming. But usually the rip your face off rally will come from a crushing opening, in the morning, okay, which will, by the end of the day, they'll be running and they'll be way up. Okay, that'll be the typical. But remember, nothing is 100% typical either. We don't get the choice of when it's going to happen or why it's going to happen, but we don't really prepare for them. But the key is what? Being aware that they're going to happen. Okay, being aware that you're going to take, if you're shorting the market, or if you're short, like we're predominantly, I don't know if we've ever been this short in our portfolios. Okay. But we know that there's going to be, like yesterday, I mean, all portfolios were profitable yesterday until the last hour of the day. Okay. So we know what's in store. We know that it's going to happen, and it shouldn't be, we should never be surprised by market action. Market action is a market action. It's been the same since the inception of markets. Okay. That has not changed. Okay. The markets have not changed. Maybe the prices have changed, the speed has changed, but you could look at many of the prices. So if you would look at, the index, when I first started trading, the Dow was 800. Okay. Now, pretty impressive, 800 to 31,000. We got almost to 40,000. However, how much was a Cadillac Eldorado in 1980? Okay. What price was that? And what price is it now? Okay. What was your house? If you bought a house around 1980, what'd you pay for it? And of course, what would you pay for that same house today? So has the market really appreciated because it is strong? Or is it really appreciated because of the addition of the money supply? So basically, it's a trade-off, which is not a good trade-off for us. Okay, it is not a fair trade-off for us because basically what is happening is the fraudulent fiat currency system continues to devalue dollars, which automatically raises prices of goods and services. So, basically, I would say for the most part that even when you were making less in 1980, 85, okay, your lifestyle was better and simpler than it is today, and you're making much more money. And if you compared it dollar for dollar, I would say it would be a dramatic difference. And that is simply the crushing of the currency. Okay. For no reason. 20 and now, isn't the Cadillac more than 65,000 now? I don't drive a Cadillac anymore. I drive a truck, but I think they're more. I think they're close to 100. But even at 65, 3.5 times. Okay. And that is not because it's gotten much better. It's because the way that they use the Federal Reserve is really a printing press for the government, so that the government, and this goes to all administrations, so that the government can give us taxation without representation, okay, and violate budgets, violate everything, okay, and spend like drunken sailors, okay. So, as you watch and you look, but again, we go back to the very simple concept of price action. Okay, here's a gold stock. Look at what happened. Boom. It found its peak and it cracked. In 5 weeks, it's got cut 50% nugget. Now that is expected because it's an ETF that ain't worth anything, okay, except for a trade at any given point. Okay, and this is again, these are the things that you have to remember. But from a trading standpoint, does any of that matter? Okay, not from an investing, not from a long-term portfolio, but from a trading standpoint, does any of that matter? Not at all is correct. It doesn't matter. You always are focused on what is the price action of the overall market or the individual stock that you are watching. That will tell you where is the money flowing. Is it flowing to sell it? Is it flowing to buy it? Is it confused, which is obviously consolidation? And that would be the concerns that you'd be thinking about, not what is going on. We already know that what is going on in this country today with the hyperinflation, the very real potential of stagflation, with the broken down supply chain, that is going to filter into earnings eventually. Okay, it is a mathematical impossibility that it doesn't. Okay, so now how will the companies adjust? The companies were caught a little bit off guard too, because typically earnings reports, what do they like to do when they do earnings reports? Well, they like to pump up, they like to give you numbers, and they like to under promise so that they can over deliver to create more action and buying of their stocks. Okay. And of course, that doesn't always work. But now, because we've seen such a precipitous drop and we've seen these problems, we've talked about these problems together on my calls for almost a year. Okay. But now that they're finally being recognized, And now that you're seeing the total breakdown of the chain and everything else, it's finally hitting Main Street, which if our reporters, if our pundits did their jobs right, then they would have been talking about this long ago. Now, if I said to you, I think we're in a recession, what would you say? Agree or disagree? Agree. And that's what I say. But of course, our economists don't say that because they don't tell you until it's already too late, right? They don't tell you anything until it's already too late for you to do anything about it. All right. So again, remember who we're dealing with, which is again goes back to understanding your own environment. Okay. I'm assuming that most of you are not living as good right now as you were even just a year ago or just 2 years ago. I'm sure that you're not starving, but I'm sure that you think a little bit more before you spend on something that you would call a luxury item. Okay. I don't think you're all running out and buying, big expensive items and committing to big time debt. Okay. Because of the uncertainty here. And maybe you are, but if you are, shame on you if you got a problem, because we know that there's going to be, the housing crisis is going to come into play again. This is almost an instant replay of 14 years ago. Okay. That 2008 collapse did not start just in 2008. That thing was building up into it long before, okay, it actually, really brought down devastation, but it was coming. And so was 1987. It was coming. There was no surprise there in 1987. The only surprise was the percentage move that it went down. Okay. But that was not anything else. The fact that it was going to collapse and go down was inevitable. In fact, it was already down going into it. So it's not like we can't see this. The real question is, do we have the stones to act on this? Or do you have the stones to become hedged and say, hey, I'm going to play this because I want to compound my portfolio. I want to bring in more dough and I want to buy more stock because I know what history tells me. Now, earlier this morning, I did my options call and I made a comparison. And I said, if you look at the three major players here, the United States, Russia, and China. Okay. Now, obviously, we're somewhat of a democracy still. Certainly not the democracy I remember from when I was younger, but still somewhat free. Okay. As I said in the past, we're as free as the government allows us to be. But we played checkers here. Okay. Russia plays chess at probably 3 moves ahead, and China's playing chess at probably 10 moves ahead. Okay. And why is that? Well, because in this country, we don't have leaders because they continue to change. And, most of the time they get elected. Now they're campaigning for the next election. They're not doing their job. They're not taking care of this country. They're trying to become career politicians. Why? Because they get the opportunity to steal at will. Okay. And that is bipartisan. That is politically neutral. They're all stealing. Okay. And so they're not worried about what's going on. They just want to continue to, make more money, make deals, make bad deals on our behalf because they know, that we're going to get taxed on it anyways. So, but when you, again, just look at, pick any stock you want, look at NVIDIA. Peaked at 340, it's already been halved. Okay. The Qs peaked at 400, they're 288, down 30%. Okay. The cryptos, I'm not going to get involved in those. That's again, they've done the same thing. Square, a payment method, got chopped in a third, got chopped by 60%, 70%. Okay. So where did all this come from? And that's what you got to recognize. And why is it happening? Well, it's happening very, very simply because we don't act we don't have a government that actually, and that does not just mean this administration, okay, although this administration is pretty weak, but that doesn't just mean that all of them forever have continued the don't keep a budget. We have a budget, but it doesn't count because we can always go for more money. Okay. We've got the Federal Reserve that is as ignorant as you can get and should have been hiking your rates for 10 years and did not. Okay. So what does it get us? It gets us problems. Okay. It gets us an economy that's going to collapse. And again, when I say collapse, it's going to collapse for a period of time. We're going to go through a major recession. Okay, that might brink upon a depression. Okay, we're going to have a lot of problems out there, and you're already seeing it. That's the point. See, you're already seeing it in many of the big high tech stocks. Where did the rally start? High tech stocks. Where is it going to end? High tech stocks. Look at the ETF. Now this is a split too. This is down 90% almost. Okay, almost 90%. Okay. Think about that. And, again, it doesn't stop there. Pick your poison, pick a name, any name, even the casinos. Okay. Look at Wynn Resorts, great company, but yet halved. And the beginning is just here. This is not even accounting for the things that can happen and will happen, but they will play out long before they were recognized on Wall Street. They will play out right here in the price action of the chart. Okay. Every week I do a lot of agricultural hits as part of my media stuff. And of course, I keep saying the same thing. Look, the prices of grains can only go higher. Okay. Look, and they go, well, every time we hear that, they go lower. I said, yeah, but we're looking at a market that we haven't seen this for many, 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 many years. We're going to have a food shortage. Okay. We're going to be short food. If I told you that you're going to pay $10 for a loaf of bread next year, would you believe it? Okay. If I said there's a chance you're going to pay $10 for a loaf of bread next year, would you believe it? And if you wouldn't, you better start because it's coming. These things are coming. You're going to be short food. Already, we already have riots in other parts of the world based on food. And if you're just tuning in, this is just a pregame. Okay, this is not. I haven't started anything yet. This is just me. This is just me being me. Okay, I like to teach whenever I get the opportunity, so I'm here. I always start every call a little early and kind of talk about markets. But there's already riots in parts of the breadbasket, which is the Middle East. They can't grow their own wheat. They're very dependent on Russia and Ukraine, and they're not going to get it. So you go back to the Marie Antoinette statement, let them make cake, and they don't want to eat cake. They want bread. They want a sandwich. Okay. But again, and now you add to 30% of the wheat crop out of play right now. Okay. You add to that, Australia had a bad year. Okay. And, they're on the opposite season as we are. We're just now just ending for most likely planting. Okay. And they're dormant right now. Okay. And Brazil, same thing, had a bad year. So we're already a little bit short in supplies. It could be about right. I mean, I'm not sure of the exact number. I know that they produce 30% of the wheat crop. That I do know. Okay. But again, so now you've got two big suppliers that already had bad years. Okay. You've got India saying that we're not going to ship any of ours out. We're going to keep it all because, of course, they want to feed their own people. And we're not off to a very booming start in our growing season, planting and growing season. Now it could change, but if Mother Nature doesn't cooperate, what do you think that's going to do? Okay. So your costs are going up regardless. That's would guarantee you will be paying more for food, for gasoline, and every else thing that you use every day. Okay. But inflation is transitory, right? So don't kid yourself and don't let the BS that you hear, okay, about what's going on. It's evident. It's obvious. I mean, again, you look at the grain markets, and yeah, they've been under a little pressure recently. But if you take a look at them, okay, and what they've done, look at this. I mean, you get much more of a bullish weekly chart than this. I mean, this is almost a cup and handle, which is the most bullish pattern that is ever created. I don't trade it because it takes too damn long, but I can see it. Okay. And soybeans, there, pretty solid. And wheat, which has been extremely volatile, pretty damn good. Well, again, it's really good for those who are selling it. But again, it's going to definitely affect the cost of you eating it. Okay. And tie that into the ridiculously high labor costs. I mean, I don't think people can get help for less than 2 times the minimum wage. So as I've always said, and those of you who've been with me long enough know I've said this, is that why do we need a minimum wage? We don't need one anymore. You know, minimum wage was originally instilled because of child labor and women. Okay. They were not getting a fair cut. They weren't getting their fair share. They were kind of, being slaves. Okay. And they came out with a minimum wage, which meant the companies had to pay. Well, now, do we need minimum wage? You can't hire somebody at minimum wage. McDonald's is paying $18, $19 an hour now. What does the minimum wage say? Anybody know? $8.25 or $9.25, whatever it is. It doesn't matter. You ain't getting anybody at minimum wage. And companies are offering signing bonuses. So when the companies lay out all this capital, who's going to pay for the raises? Who's going to pay for the higher payroll? Who ends up paying for this? We do, Bubba. Yeah, we pay for it. It doesn't get paid for by the government. It doesn't get paid for by anybody. We pay for it. Remember, the government, the federal government, was never supposed to be this big. Okay. But the federal government creates nothing but debt. What do they create? Nothing. They create debt. They create bad deals. Okay. And they've been doing so for God knows how many years, in my entire lifetime, anyways. Okay. So they don't create anything but debt. Okay. They create problems. They create trouble. Okay. Which is why they were never supposed to be as big as they are. But this inflation, this whole story can only get worse. Okay. Until something is done. And again, this is just the pregame. I have not started anything yet. You don't have to ask me. It's all good. We're going to start at high noon, okay, with the actual presentation. So I'm just having a good time and hanging out with my friends and talking a little bit about markets. But we know that it's got to get worse before it can get better. I mean, do you foresee the price of petroleum coming down anytime soon? Do you see the price of oil coming down in price? Okay. Everybody was so excited a few weeks ago with the announcement that Saudi Arabia was going to produce more oil. Does anybody know why it was not bullish and why it didn't bring prices down and what the real story behind that is? Does anybody know? I'm going to tell you, but I'm just curious. Everybody knows. Okay. They're meeting demand, and we're going right into driving season. Okay, this is Memorial Day to Labor Day is considered driving season. There's always a higher demand for fuel. Okay, so now, so what did they really do? They met demand. They're making a fortune. They just declared profits, the record profits of all time. In fact, Aramco is now the biggest company in the world. They replaced Apple. Okay, and yet the United States has over a 200-year supply of oil without going into the national parks, without going into all the protected areas. But we don't want to frack it. We don't want to get it up. Okay. We would rather pay. Okay. And certainly as things tighten, does anybody believe that Saudi Arabia is going to help us? Okay. Help a brother out. Does anybody believe that is ever going to be the case? Yeah, you always gonna hear my answer. Okay. Does anybody think the Saudis are going to help us out? Okay. Does anybody think, that anybody's going to help the United States when most are trying to do whatever they can to put us out? Okay. Unless it helps them more, is right. So, remember what you have. Okay. You have rising inflation, which, they kept saying transitory, which is BS. But suddenly we've got housing markets crashing a little bit. Now they're not this devastating yet, but they're getting closer. And, again, remember, the higher mortgage rates get, the more defaults that get created. What happens? The banks get under pressure. And of course, the banks have the best deal in town. What a business to be a banker. You can't lose. Okay. You overlend, you overexpose yourself. You give more than the legal law allows. But when you go bust, where's the Federal Reserve giving you money? Okay. It's a wonderful program. Just ridiculous. But again, it is what it is. I can't change it myself. Okay. But certainly I can make you aware of it. And that is indeed factual. Okay. And all I have to do is look at 2008. First of all, why didn't they let the banks go broke that were bad? There wasn't that many bad. Okay. And the ones that get strong and bail out the depositors. Why do we, the citizens of the United States of America, get stuck with just a much bigger tax bill? Going back to taxation without representation. Again, we have to remember all the things that are part of this stuff, right? That create higher prices, and higher prices create hardship for many. Can you imagine if you're a person, making $50,000 a year and that has to do partial driving, maybe you have to fill up your tank once a week, 20-gallon tank at $5 a gallon, $100 a week in gas. That's 10% of your paycheck. And that's your 50,000 is pre-taxed. So if you end up with, 40 or 42, 43, you're paying 12, 13% of your just to fill up your car to go to work. How's that work out for you? Okay. And your food, how are you going to feed your family? And this is why, we talked about the commodity markets and why certain things, this is the issues that are created by a ridiculous setup. Okay. When you let these prices get out of hand, and we know there's more solutions to solving the inflationary problems that we have. However, okay, the powers that be do not want to solve those problems. The powers that be, for whatever reason, they want to strip the Americans of their money. Okay. For whatever reason, they want to strip us, and they don't want to solve it. And so the only only way to solve it now is through an organization that has been stealing from its people in the United States since 1913, but in history since the 1600s, when the central banking system was developed. Okay. The central banking system, the fiat currency system, is the most fraudulent system in the world. Now, many talk about market manipulation. Those markets are not manipulated, although they are stolen from. There's a difference. They still have to go through a price discovery. However, what we can never account for is how many more dollars are they printing, which, anytime you've ever heard of a secondary on a stock, what they're really doing is they're issuing more shares. They're devaluing the stock because they need money. Okay. The government needs money, so they devalue the currency, which artificially gives them more capital to play with. Okay. It's a bad deal. It is fraudulent. It is borderline treason, but they all do it. It's a circus act of the euro currency, the yen, the Canadian, the Aussie, and the US dollar, Swiss franc, because none of them, other than the Swiss, has a little bit of a tie to gold, are benchmarked anything anymore. When they went off the gold standard, that was the beginning of the end of anything. Now, again, the The Federal Reserve, which is supposed to be private, and it is, but it's not, right? It is on paper, but they're part of the political system. Okay. They were supposed to help us, but they don't. They make it worse by trying to prevent any failure, which we know that is impossible. You cannot borrow your way out of debt. That is a fool's game. Okay. And if anybody's ever tried to keep borrowing to satisfy your debt because you couldn't, you wanted to make sure that you could still live the same lifestyle and you didn't have any other way to try to do it, how did it end up for you? Not very good. And for those just tuning in, this is just the pregame. We will get started here in about 5 minutes. So I'm just hanging out and kind of talking markets. So we've got some pretty significant trends, and from a macro view, what's going on in the economy right now will be very bad for stocks. It should be very good for commodities, okay, and for all their own reasons, which obviously is always a problem, because of course, commodities, anything that is consumable, okay, runs really off supply demand, and if they don't have enough and we consume it all, what is it going to happen to price? All right, and so that means that buckle up and be prepared to pay a lot more money for things that you're going to get, because unfortunately, that is the direction in which we're headed. The minute they claimed transitory inflation was the first sign that we were headed down a bad road, because as you can see, I was just squawking about a mortgage. I sold a house and I bought a house for my son in Illinois because I live part-time in Vegas, which is where I am today. And I was squawking at a 4.25 30 and a 3.37 15. Today, those same rates are 5.5 for a 30 or 5.25 for a 30 and over 4% for a 15, okay, in 3 weeks. So, and where do you think that is headed? Okay, that is not headed lower. Okay, it is headed much higher. And of course, that is why the financials may benefit early here, because their spreads get bigger and their ability to make money gets bigger. Okay, but overall, it could be fairly nasty. Okay. How high do I see? I think rates are going, I think interest rates are going to 7-8%. Would food stocks do well? Archer Daniel Millions has already done real well, but yeah, I mean, that'd be okay. Again, to me, you buy what you want as long as you're hedged. Okay, here's Archer. I'm sorry, this is my bad. What the hell is their symbol? I forgot already. Archer, what is Archer symbol? I own some, but I can't remember what the symbol is now. I'm drawing a blank. Is it AD? I don't remember. What's the symbol? Anybody know real quick? ADM? Yeah, there you go. Archer in a minute. Makes sense. Not AMD. I had the right letters, but the wrong ADM. Oops. AD. God damn. I'm not a good typist. ADM. Yeah, there you go. I mean, it's still coming off a little bit, but yeah, I mean, they're going to perform better. But again, the risk on, risk off environment is horseshit. Excuse me. But again, you cannot time the market under any circumstances. So why bother? But yeah, these are, I mean, listen, Argentina is nothing but go up. Okay, but suddenly, I got a second here real quick before I shut this down and get the new recording started. Deere, okay, look at what happened to Deere. And they beat earnings. They beat earnings. They're in the agricultural industry and got clobbered yesterday. Okay. All right, I'm going to stop this. This is the pregame. If you want it, email me at bubba@bubbatrading.com. I'll be happy to send it to you. The regular recording I will send to everybody. But if you want the pregame, you must please email me. And let me just stop this recording and we'll get ready to rock and roll. Stop. Yes. Thank you, my dear. I appreciate it. Thanks for your courtesies. All right, let's get ready to the next one going. And what's up, everybody? I'm about a minute early, so I'm just going to stammer and stutter here for a second as I say good morning and welcome aboard. And glad to see you here. Packing the house and moving to Del Webb. Sun City, Huntley, Illinois. Good for you. Okay. And again, I'm a big fan. I'm not a big fan of Illinois, but yeah, hey. But again, there's a lot of things that we have to discuss today. There's a lot of things that we either take for granted or don't think about, and of course, are never properly educated about. Okay. And I think that it's important that you understand that markets crash. Okay. And that's not a rare occurrence. It is an occurrence that happens every 8 to 10 years. Okay. Again, you may not look at it that way because we make headlines of 1929, of 1987, but they happen all the time. You get these big downdrafts because you get overbought from money that shouldn't be there. And for whatever reason, economies change and you see some dramatic stuff happen. And I think we're in the very early stages right now. Now, I do not, by rule, talk about fear. I'm not a fear guy. I'm not trying to scare you into anything, but I'm going to tell you facts today. And I'm going to share with you what I think and why, and how you can avoid those cracks and those fears by using the models that we talk about. But there is a lot of things to be, I'll tell you what, there's a lot of things to be really very, very concerned about. Okay, so welcome aboard. It is high noon. And again, hedging your portfolio, preserve, protect, and prosper, which is being hedged. Okay. Now, if you know me, you know one thing for sure. I give you facts. I am not here to create fear for you. I don't sell on fear. I don't want to create fear, but I do believe in facts, and I do believe in what is going on. And I've talked about it extensively for the last 7 or 8 months, okay, of what was going to happen. Okay. And it is now playing out. And certainly all of my members, my current members, are prepared for it. I'm prepared for it. And I'm actually looking forward to it because I'm going to benefit long-term over it. But are you prepared for it? And that's one of the reasons that you're here. Okay. So, but again, I'm not going to sit here. Look, I'm going to give you, you're going to see some scary stuff, but it is not with the intention of scaring you. It's intention with having you wake up because the ship is going down. Okay. Are you going to bail out? Or are you going to go drown once again, as you've done every time in the past? Okay. In the meantime, I must show you the disclaimer and share that with you. Okay. Options and, involve risk, and the past performance is not indicative of future. Look, bottom line is I'm not promising you anything but protection. Okay. That I can promise. I can protect you to a mathematical certainty. That I can do. But I'm not promising returns. Don't ask me about what the returns are going forward because we don't ever know. There's too many factors. And if you're coming with me just to look for returns week by week, you're by the wrong person. And you ain't getting, I don't have that, nor would I ever claim anything that I know that you're protected. I know that you will be compounding your portfolio, but I can't tell you numbers because I don't have them, because they're impossible to calculate. Now, if you look at the psychology of the average investor, and I'll assume a big percentage of you are the average investor. We Americans have a tendency to be fat, lazy, and don't really care. Okay. As long as I can make my monthly payment, as long as I can do what I got to do, whatever goes on, it don't bother me. But when it comes to money, when it comes to the markets, investing, we go through the same things. And how many of you have sat through major sell-offs, okay, and finally panicked and puked at the absolute stone bottom of the market, okay? And again, nobody has to comment, but if you want to tell me, you can, but I can give you the number without you telling me, okay? And I'm going to say it's greater than 50 to 60% of you, okay? Which will always struggle to try to keep up with returns because you're too busy trying to time a market that can't be timed, okay? You're trying to be exact and you're listening to all the crap that's spewed out there. But if you look at this is the same cycle that repeats over and over again and has done so for 100 and almost 200 years now. Okay. Optimism, excitement, thrill, euphoria. Oops. And then, of course, we get the big beat down and the whole cycle starts over again. Okay. And what I think you're seeing right now, just in my opinion, okay, I think the rally that we saw, or the attempt to hold these markets up, was based on retail trade. Okay. And when I say retail trade, I mean you and me, mom and pop, buying stock. Okay. Because we're finally buying the dip that we missed all the way up. So we're buying it now. And the commercials are getting ready to pound them. And they know, because of the light volume, they have to be very careful at how fast they sell them. Okay. Because they want to lure you in before they crack them pretty hard. Okay. And again, the question is, are you seeing the signs? Okay. Now, Tom Caruso, my buddy, my partner, my friend, okay, reads the Wall Street Journal, and he'd send me some headlines, because I don't read it. I've never read it. But he took the time, because we've both been hedging. We've been together for how many years, big boy? I know you're here 6 or 7 now. Okay. But again, it's something we believe in. But let's get you caught up on just a few handful of headlines that you might have missed in the last 48 hours. Okay. And again, if this don't scare the crap out of you, I don't know what would. Recession fears. Now, again, I'm going to say this again. I think we're in a recession already. I don't think there's recession fears. I think we're there. Remember the movie? Are we there yet? I think we're there. Okay. Again, you're never going to get a straight answer from an economist, because they got to have their models, and their models are worth garbage. Okay. The Fed's, I think the Fed is still using the same program they used in 1913. Okay. If you want any comparison to that, the Ford Model T came out the same time as the Federal Reserve. Look at Ford and look at the Fed, still stealing from America. Okay. You got recession fears. And I said there's already a recession. Okay. Remember the big rally? It was really led by a few of the stocks, right? Remember FANG and others? We had the big rallies, and they were always lacked true, real participation. Okay. And suddenly, all of a sudden now, they're getting hammered. Okay. And again, and who's joining the party now? Walmart. When did you, in your life, did you ever think Walmart would go down 30% in 2 days? Okay. One of the safest stocks in the world. Okay. Who would ever think that has the capability? And right after that, down went Target. Okay. Now, these are staples. These are the biggest company, the biggest retailers in brick and mortar. But of course, there's no supply chain. So they don't have enough supply, so they can never make their earnings. Okay. I mean, look, retail sell-off. Look, retail's been in trouble for a while. Now it's in big trouble. I'm really curious to see what's going to happen with Amazon here. Okay. It's already been under heavy pressure, but I want to really see what's going to happen here, because that, again, you're seeing hiring freezes. Okay. So while many companies need help, you've got many of the tech companies going to fire help. Okay. But U.S. stocks and mixed, but weekly losses as Dow suffers longest losing streak since 1932. Okay. What does that look like? That is not the best of news, is it? Since 1932. Okay. Bear market territory, nobody's concerned about it. Well, again, guess what? This will be the same as what happens always. Okay. Is there will be a major panic, as always. The inflation Japan wanted is finally here, but not for the right reasons. And again, we don't have inflation for the right reasons. We're not getting growth. We're having failure. Okay. We're having stagflation. Is that what we need? We don't have enough people. We don't have enough people working in the workforce. They refuse to show the right numbers to tell us who's not working in the workforce. Companies are paying twice the minimum wage, and they can't get help. Okay. Plus, they can't get delivery. It may be a bear market, but it's not a panic. That's worrisome. Of course, that's worrisome, because what that means is exactly what I said earlier. Retail traders are trying to buy this dip, and they're going to get hammered once again, unless they're protected. Okay. Look, U.S. home sales, what do you think is going to happen in the housing market? The housing market was a house of cards anyways. Okay. Why? Because it was based on what? Interest rates. Cheap interest increased the value of the house because the buyer can make the monthly payment. Okay. Well, suddenly that has changed. Suddenly with interest rates going from, let's say, 3% to now 5.5%, okay, and going higher, okay, the escalator is going higher, okay, what's going to happen to the housing prices then? Okay, so all that money, that artificial money, those people that they had in their home, is going to go poof and disappear. Okay. In the meantime, if you don't know me, okay, I'm the loud guy in the room. Okay, I'm Todd Bubba Horowitz. I've been a professional trader for 44 years. In the last 10 years or so, I became an educator because there is no more floor. And now I work harder. But again, I was one of the original market makers in the SPX, and every program that I market, I trade myself. Okay, I do not put out anything that I don't trade, okay, or use as an investment vehicle tool, which is what the hedging model is about, is the tool to help you get there, okay, and to make sure that you'll benefit from the next market collapse, not puke it out and panic as most of you have done in the past. Now, there's warning signs. Remember Chicken Little, the sky is falling, the sky is falling. Well, guess what? The sky is falling, okay? Here, the Brinks truck to get your cheddar, coffee, bacon, okay? Think about it. When's the last time you've been to the grocery? Now, I don't typically go, but I have to go when I'm in Las Vegas and my wife isn't there, so I can go shopping. And I'm having a heart attack at the prices I got to pay. And of course, if you remember Lost in Space, danger, Will Robinson, in danger, and holy crap, I got news for you. These signs are very, very troublesome, okay? And if you're not paying attention, you're going to get wiped out, okay? It's that simple, okay? You must be prepared to act, okay? Because there's a certain thing we know about markets, which we'll talk about, but you must be prepared to do something. Forget about someday, because someday is here today. Okay. And again, look, everybody will tell you, I don't drive panic. I'm not interested. I never want you to become a member because I made you afraid of your environment. I want you to learn how to benefit from your environment. Okay. I do not teach panic. I refuse to mislead investors as to what's going on. I believe in factual information, which is why I do a lot of media, if you don't know that. And I've been kicked off of a few shows because I will not lie to the audience. I will not create something that I don't believe is there. I will only give my beliefs. So I can teach you how to get through this. Okay. I can teach you how to benefit by going through this. So it's up to you when it comes to said and done. If you want to be prepared to go through what's going on. Okay. Here's a few more headlines. Existing home sales skid to pre-pandemic level. Gee, that's a shock. Somebody said the other day that Dr. Michael Burry, who The Big Short, came out and said that. I said that's 8 months ago. I've been talking about this. I've been talking about what's happening today for months. 68% of CEOs say Fed policy is about to trigger a recession. No, not a surprise. I mean, they can't get help. They can't get work. But this is the one that really gets to me. 76 gas station chain reprograms Washington State pumps for $10 a gallon. Okay, what do you think about that? Now, if you think that $5 a gallon takes a big bite out of you, what do you think $10 is going to do? Okay, half of Americans are going to face power blackouts this summer. Now, think about this for a minute. Okay, you've got the big push for green energy, and I got no problem with it. Again, whatever it is. We don't have the power grid to handle what we got now. Okay. So where are we going with all this? But yet we don't have enough oil. As inflation soars, 1/3 of Americans are experiencing financial stress. How long do you think that will be until it's 1/2? Jimmy Carter, it's right. It is Jimmy Carter all again, but it's worse because I don't want to get into politics. It's worse though this time. Okay. You definitely can use this as an IRA. You can use it anywhere. Okay. And I'll go through all that. But again, you got to remember, look, again, I'm not going to scare you into doing anything. I don't want you, if you're buying because you're afraid, I want you buying because you understand it and you say, that makes sense that I can actually benefit through this next collapse and not get pounded. Okay. Anyways, so where am I? There I am. Okay. What makes a good investor? Well, you have a plan, right? So hedging program is a plan. People forget that investing is a job. Okay. It's not a full-time job, but it certainly is a job that requires management. And I could never understand that in my wildest dreams that people will invest money in places. Oh, it's okay, whatever, I don't care. And then suddenly they panic. Okay. You have to stick with your plan, even when the markets are look unfriendly. But again, we can change those dynamics for you. It'd be diverse. Okay. You have to be patient. It's about delayed gratification, not instant. If you want instant gratification, you're in the wrong place. Okay. The ability to tune out the noise. And who is the noise? The news is the noise. They're so full of crap, they don't know which way they're going. Number one. Number two, they don't understand half the things they're saying. They're reading from a teleprompter. And number three, by the time you hear the news in 2022, figure you're the 2 millionth person that heard that. Because today, news travels so fast, it isn't news when it hits the TV set. The news is already played out in the price action in the market. Okay. You got to do your homework. Now, this is not full-time homework. You're not a full-time student, but you have to have enough studying so that you can understand and expect. My members are never surprised by what happens in markets. We are always prepared for all market conditions, no matter what happens. You got to get some knowledge. You ever heard the statement, Benjamin Franklin, knowledge is the best pays the best dividend or the most interest? I'm 44 years into this. I'm 65 years old. And you know that I study and try to figure out ways every single day to be better. Okay. And of course, by being hedged, that's the biggest key, okay, of the whole story. But 40-year high inflation, our only hope is that Jim Cramer calls it top. I mean, again, Jim Cramer, whatever you think of him, he's the one who got me kicked off of CNBC because I called him an idiot, which I still believe. But again, he's a very high in energy guy. Buy, sell, whatever. Who knows? Bottom line, he got no clue. He's got no clue. But what he does have is he's got some dough behind him. He's got a trust, and very much like Warren Buffett. Okay, how many of you that were unhedged could take a Goldman Sachs and buy it at 140 and watch it go to $10 and not get up? Okay. Well, Warren Buffett can do it. That's what, they make him out to be this guru genius. And don't get me wrong, he's a smart guy. I don't like him, but I'm not going to, I can give you stories about him, that I wouldn't be so favorable. But at the end of the day, look, I can respect it, but he does believe in the markets overall, and he has the capital to stay. But how many of you got 32 billion laying around doing nothing? All right. So again, when you're hearing people talk, A, is it their money that they're investing with? And B, who are they? Do they have the capital to withstand, the thing? Because the key, I'll tell you one right now, is to always stay in the market in your investing account, because that's where you're going to make the bigger money. But remember this, and this is, again, this has a lot of connotations right now, right? What's going on, but those who don't know history are doomed to repeat it. And I did look. I'm not saying this is going to happen, but this happens to be a chart of 2008, which I traded live on the floor through this. Okay. And this happens to be today. Okay. Now, what do you see? You see any similarities? Do you think that history could repeat itself, which it has done time after time after time? Is it not destined to happen again? And of course it's going to happen again. We don't know the exact timing of it, and we don't know what will be given as the exact reason. We know what the reasons are, but we don't know the answer that's going to be in the public, how the experts are going to spin it. Okay. How the government is going to spin it. Right. Now, if you remember, before many big market meltdowns, you had a major official come out and say, hey, everything's okay. We're in good shape. And of course, that's like giving the coach in a football team, your job is safe. He's fired on Monday. Okay. So you have to ask yourself, do you want to be an average investor? Are you looking to be average? If that's what you are, you probably shouldn't be here. Okay. Because we're not average. We excel in markets. Okay. That doesn't mean we make money every day, but it means we're always protected. It means we don't panic. We don't get forced out of positions. We're always staying with what our ownership is. Okay. But if you're average, it's probably not the right spot for you unless you want to improve. If you like being average, hey, look, I can't tell you what to do. I can only share with you ideas of what's going to make you better. It's up to you to make the final decision. Do I really want to be better? Or am I happy getting my ass kicked every 10 years and having to regroup? And half of you never got back in after the meltdown in 09. You're still looking for an entry point, 3,000% higher. Everyone is a genius in the bull market. Look, can I tell you, my son, as I mentioned, if you know, he's a financial advisor. And I said, son, Xander, get ready. They'll be coming your way now, baby, because there's going to be a big shakeup in the advisory world because most advisors don't give a rat's ass about the customer. They care about the commission check, and they couldn't read a chart. They couldn't find their ass with their elbow. Okay. So again, look, at the end of the day, when the markets are going straight up, buy them. I remember in the 90s. Okay. Buy them every day. Just buy them. They're going up. It doesn't matter. But one thing you want to learn at the same time, though, is to pay yourself first. Okay. It doesn't mean you have to invest those dollars right away, but the first check you write every month before the mortgage, before anything, should be to you. You should have that budgeted out so that you can continue to invest in the market. Because I'm going to tell you one thing, and there's going to be a lot of gold traders here that are going to squawk and yell at me, and I don't care because they're wrong. Okay. The greatest single investment in history is this U.S. stock market. Okay. It has the highest return, dollar for dollar, in history. Is it been pure, clean all the time? No. But again, it doesn't matter. Dollar for dollar, it's the greatest single investment there is. Okay. So, again, the key is, how can you solve the problem? You got to stay invested. Okay. Now, look, I will tell you straight up, if you don't want to hedge, okay, don't sell your investment portfolio. You're not trading. You're not a trader in an investment account. You are an investor, which you are building either your IRA, for whatever reason you're saving in your investing account, you're saving it. You want to trade, open a trading account. That's fine. I trade every day. Okay. I trade with my members the futures members every morning, 9:30 to 10:30, every day. Okay. So again, trading is trading, investing is investing. And that's the old story. You heard about the janitor. I know that's not the right term. It's not politically correct, but I'm sorry. But the janitor who, you knew him, lived down the corner, had a cat. Okay. Didn't hear much from him, very quiet, made $25,000, $30,000 a year, dropped dead. And he left $5 million to his cat. Okay. Where the hell did he get $5 million? He got it by investing in the stock market and letting it compound itself, because the stock market does go up and average since 1950, 10% a year, and in history, about 8.5% a year. Okay. So if you're using stocks, and again, that's what but listen, I sound like my dad. I didn't listen so much when I was younger. I was making too much money. It was like I didn't think they'd ever turn off the waterfall. Okay. But again, at the end of the day, this is what happens. And that's how you compound it. Okay. So if you're not going to hedge, at least use good, solid companies. The only time you would ever sell one of your holdings in an investment account would be if the fundamentals change. If you own General Electric, you should not own it now. Okay. Because it's changed. The dramatics have changed. But time has proven that good companies that are going to be around years from now, you're not buying Beyond Meats today in your investment account, unless you're taking a little bit of a shot. Okay. But they don't even make money. So what good are they? But you want to compound your portfolio at the same time. So if you're hedging with our model, you're always compounding it regularly. If you're using, if you're just holding, then if you get dividends, those are reinvesting. And if you're putting capital in, you're buying your average, you're doing cost averaging, which again, it's the second best choice, in my opinion. Okay. The first best choice is obviously protection, right? You got to protect yourself, and you can't. And it's always interesting, people insure everything. Why wouldn't you insure your money? I mean, I'm paying all this money for life insurance, which I'll never get the benefit from. I got to pay. It's a law. I got to have car insurance. I got to have health insurance. So by the time I get through insuring, I can't afford anything. Why would I want to insure the cash that's actually supplying all that? Okay. The bear market survival guide. Look, the bear market is one of the greatest things you can actually get from a trading standpoint, because the amount of stock that you will accumulate if you hedge it and the amount of rallies that are going to be, these rallies, bear market rallies, are vicious. They are so fast and so explosive. People go, why am I not participating in this? And it's a trap. Okay. Again, I tell you, but compounding your portfolio, Albert Einstein, compounding is the eighth wonder in the world. Look, wealth is built on compound interest. Okay. It's not built by putting in a passbook account and sitting there like a jackass. It's not built by anything but investing and growing that investment as it compounds over and over again. All right. You've heard of the rule of 72. Okay. That's how long it takes money to double. But if you create more money, it starts to double faster. Okay. It's getting bigger and it's doubling. And your rates are changing. Again, there's a whole deal. But that's how people, you hear these stories of people that never made much money, but died with a fortune. Okay. By staying in the markets. Okay. So if you could stay in better, wouldn't you do that? So hedging itself, it's a risk management strategy used in the limiting of offsetting the probability of loss from fluctuations in the prices. And basically, in simple terms, insuring your money. Okay. But if you could insure it to a mathematical certainty of risk, why would you not do that? There you have a chance. And you're going to use that money. Your life insurance, you ain't getting paid. Somebody in your family's getting that money. Okay. Your car insurance, you hope you never use it. And certainly your homeowner's insurance and your health insurance, you never want to use. I don't mind using this insurance. Why? Because it lets me buy more shares without having to reach into my pocket. Okay. Because it allows me to compound my portfolio faster. Hope is not a strategy. If you're banking your stuff on hope, you have no chance. Go buy lottery tickets. You'll be much happier. Go sign up with one of those imbeciles that promise you $5 billion tomorrow on a $500 investment. That's hope. That hope is not a strategy. Hope is for those that continue to get abused by the hope. Okay. That somebody's going to have the magic secret. 44 years I'm doing this, there ain't no magic. There's work, there's study, there's understanding what you're trying to accomplish and putting yourself in the highest position of probability. Okay. So ask yourself these two questions. How would you like both protection and potential? And how would you like the benefit of compounding without stressing with the market's ups and downs? Okay. That's what you got to ask yourself, because that's where we're leading up to here. Okay. The real importance is delayed gratification. And again, every time, and I'm sure some will do it today, and I'll have a nervous breakdown, and I'll melt down and yell at somebody, but how much is the return? I have no idea. Okay. I don't know what the market's going to do tomorrow. I don't know what implied volatility is going to be tomorrow. I don't know anything about tomorrow. What I do know about tomorrow is that my $200,000 in one account is a maximum risk of about 6%. And at that point, I start making money back and I start buying more stock automatically on the hedging model that I'm using. Okay. You have to get in the facts of delayed gratification. Instant gratification, you're a loser. You got no shot. Okay. This is not a business for instant gratification. Those are the people that continue to buy the penny stocks and all the crap out there. Okay. Is that what you want to be? Hey, look, it takes all kinds. It takes all kinds of people to make a market. You do as you wish, but I will give you the square and straight story and the best story. The general wins the battle. It makes many calculations. Earlier I said to you, maybe it was in the pregame, but I said, the United States plays checkers. Russia plays chess, 3 moves ahead. China's playing 10 moves ahead. Now, that's not a criticism on the United States, except the fact is that because we have elections every 2 years and because they're always campaigning, they're not doing their job and they're not paying attention to the much longer picture. Okay. Which is why we're in this mess. Okay. But as a trader, as an investor, you should never be surprised by market activity. First of all, it shows up in the price section of any chart, number one. Number two, you should learn to expect certain things. If you get a real sharp sell-off, expect a rally. That rally yesterday afternoon was no surprise. Okay. I mean, it wasn't good for me, but it was no surprise. I'm not shocked by it. And in fact, I said it in the morning that I expect a big rally. I just didn't expect it until Tuesday. But just kidding around with the timing of it. But again, don't think you should never be surprised by what happens in any market. Okay, because there's enough data in the chart alone that will give you the answers that you need. And what others have to say, I only hope someday I will get to thank you in person. My trading has evolved higher than I've ever imagined. Just to be relaxed, no panicking, and waiting for trade to come to you is so cool. I would never made here without you. And I get these all the time. But again, I'm not looking for a pat on the back. I'm trying to share with you that what we do works. Again, I'm not interested in garbage. Okay. I'm not going to give you, for example, if you're ever buying just a single option for anything, you got the worst of it to begin with, a single option. Never accept a short-term solution to a long-term problem. Investing is not short-term. Okay. I don't know anybody who's investing for tomorrow. Okay. Maybe a series of tomorrows, but for tomorrow, 24 hours from now, I don't know anybody who's doing that. If you accept a short-term solution, short-term solution is a job. That's a short-term solution. Very few people get wealthy from working. You get wealthy from investing properly. Okay. So, when you react to one day in the market, especially if you're hedged, you're going to always have trouble. You're going to always be tracing the dream and never satisfied. I've been doing this, I've been trading for, as I said, for 44 years. And I was a pretty big trader in the old days on the floor. And it's never changed. Amateur traders, they have to be right. I didn't give a crap if I was right or wrong. I want to make money. I was there to make money. My opinion is meaningless. I have a pretty sharp opinion, but what do we know about markets? Markets are always right. Opinions never are. Okay. And if I'm thinking it, so is somebody else. Let the market tell you what to do. That's what pro traders do. That's what professionals do. They read the price action of the market. They use whatever methods they're using to identify that, and they let the market do what it's supposed to do instead of trying to outguess it. But amateurs to this day still want to say, it's doing this, and I know it. Okay, you have a good time. When you're in the bread line, let me know. I'll see if you can get yourself out. So 10%. What is this number? I've kind of went through this already, but it's the average gain, annual gain since 1950. Okay, 10% has been the average gain. And again, like I said, it's like 8.5% since inception. And so why would I expect it to be different today? Is something changed? Are we in a new market? If you're old enough to remember the 90s, that was the old economy, new economy, right? You didn't have to make money anymore. All you had to do is put .com behind your name and you get $1 billion. Well, guess what? It turned out you still got to make money. So listen, as bad as things are right now and as tough as things are right now, I'm a believer in the United States of America. Okay. Well, again, just not every year, but average of 10%, but not every year. It will average over 100 years. It will average 10% per year, but every year will not go up 10%. Some years will go down 20%. Some years will go up 40%. In the meantime, okay, I'm a big believer in America. Okay. As much as what's going on pains me right now and hurts me, and not for me, I'm old. Listen, where am I going? My life isn't going to change, but I do worry about my kids, your kids, my grandchildren that I don't have yet. But again, I worry about the youth and what's going on here. Okay. But again, besides that, but investing is still the way to overcome many things that are bad. You cannot live on savings alone. You have to compound that money because the money that you're saving is continuing to be devalued. So you have to outperform inflation. And I heard a rumor, I don't know if it's true or not, but next year's cost of living raise for Social Security is going to be 8%. That tells you that true inflation is probably over 20, which is my contention. The CPI was 8.5%. I say you multiply that by 3, and that will give you what true inflation is. Okay. And yeah, I talked about the rule of 72. So again, if you have 20,000 and you hold it at 8%, it'll double in 9 years. Okay. If you can increase that, you can increase the rate, but it's still always the divisible in the 72 will tell you how long it takes to double your portfolio. But if you double it from 20 to 40 in the first 9 years, now you're going to double it faster the second entry. So again, it's the ability to stay within the market invested, because timing the market has never worked in history. Yes, you get lucky occasionally. And you know what happens to those who get lucky? they end up blowing out anyways, because then they think they're God and they think they can never make the wrong decision. And trust me, I know. I've done it myself. So anything that happened to anybody, I can speak for from personal history as well. So what is hedging? Okay. Obviously, it's insuring against your portfolio. Okay. And we buy put options to protect the value of the underlying stocks and sell call spreads to finance them. Okay. And we do more than that, but that is the basics. The put, it's actually going to be a put spread, which you'll see the exact trade, but the put spread, which acts as the insurance policy. But if you buy a straight put, as I said 5 minutes ago, you're making a mistake. You'll go bust. You cannot overcome the time decay and the involvement. I'm not going to get into the deep and down and dirty of options here, but you can't overcome. You have to create a trade that does the same thing, but does it better for less cost over time. Okay. But it is an insurance policy. Okay. When the market goes down, we cash the insurance policy and we buy more stock. Okay. In fact, you'll see a couple of examples of just yesterday what I did. Okay. This ensures that our overall portfolio value almost never goes down, especially in a bear market. In fact, our hedging model can make the most portfolios grow in a bear market with the increased success of the call spreads. And again, that is correct. Okay. And again, we're not saying that there's no loss. I will tell you that I can give you the mathematical certainty of any position for that period of time. Okay. Now, why do you need protection? Emotions. Okay. People are very emotional. You hear the story, you hear the idiot pundits talk about the high frequency traders. Do you know how much bullshit that is? High frequency traders. Do you know who the high frequency traders are? Look in the mirror. You're it. You're the ones who panic that 5 billion people are putting that button, selling whatever they're selling. High frequency trading is only put me out of a job. That's what replaced market makers. They're working on fraction of a penny on billions of shares. You want to avoid the fear and the panic sell. You want to keep your long-term portfolio. And again, the only time you should sell a stock is if it has fundamentally changed. Okay. And you want to create more yield, which is what we also do. We work on creating more yield. Now, many of you, diversification, I call BS there. Okay. I know one thing. When the crap hits the fan, they take no prisoners. Did you watch it at all last week in some of the big selling? There wasn't an asset class that was up. Everything was down. Because does anybody know why that happens, by the way? Just a quick side note. Does anybody know why that happens? Okay, I'm going to talk faster because again, I don't want we're running a little long, but anyways, it happens because people want to support a losing position, so they'll sell a winner to satisfy a margin call to hold a pig, a dog. Okay, happens all the time. Covered calls, you sell covered calls, go see a doctor immediately. You should have your head examined. It's the worst strategy ever. Okay, 30 years ago, it was okay. Today, if you're selling calls, you are sick and you're going to lose. You're never going to make money and you are not protected. Okay. You're giving up your stock at whatever is the premium you sold if it gets taken over or it has a big rally. And the downside protection is going to be whatever you get, whatever premium you collected. Okay. It's dumb. You should never be short naked options. Okay. It's an ignorant strategy that will only penalize you over time. Okay. Gold and other precious metals, look, I don't care what anybody says, and I've had this argument, I write before Kitco. Gold is not a hedge against your equity portfolio. Okay. At most, gold is a hedge against currency, gold and silver. Now, listen, I'm a big fan. I own gold and silver, and I buy it physical all the time. I trade the paper. I buy physical. I'm a believer, but I don't buy it because it's going to break my equities, because it isn't. Just look at a chart of both of them. Okay. Non-correlating assets, what are you trying to do? Pick the market? If you could pick the market, you wouldn't have to hedge. Okay. Risk on, risk off, those trades are so ridiculous. The risk on, risk off was created for one reason. It was created for you to create more volume for the advisor so that your money was in there, because when your money's in cash in your account, they don't get paid. Okay. Put options, again, you'll go bust
buying naked puts. Stop losses, I don't use them. I use them only in day trading, but I'm hedging, so I don't need to use them. And I don't believe in them. I think you have to find a level that you want to get out, but I don't like to leave them lingering because I don't want to get a quick strip, a quick flush and get taken out before it goes my favor. I will make the decision, but you have to have enough discipline to do that. Dividends, listen, dividends are nice. They're nice to reinvest them, but they're not much protection. Okay. And hope and pray. Well, we know what that does. And your allocations, look, allocations are what you want them to be. I'm not a believer in, I own zero fixed income. I own all equities. I'm 65. I'm 100% in the equity market. From that side, I've got X amount in gold and silver and platinum. But from my equities, I'm all in all the time. All in all the time. I don't believe in bonds. Okay. I do have one bond left, I think, from my bar mitzvah, which is 52 years ago. Okay. Real estate I own 2 homes. But that, again, to me, they're not liquid investments. Okay. And wait till we get the big thing going. And I love commodities. I do trade commodities. Okay. But again, from a pure asset allocation, most of my portfolio is going to be stocks. Okay. Now, this is one of my portfolios. This is one that is active right now. Okay. It is open right now that I've done. And this is something we teach in the class, which is how to take your IRA. If you've been lax at putting enough money away, okay, this will help you because I can show you how to accelerate by using risk reversals and synthetic stocks. And you can see that I represent 200 shares of coin, 900 shares of IDM, blah, 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 down the road. And I have only these amount of real shares. Well, I created these shares by using options. Okay. Now, originally this portfolio, I'll show you the original portfolio that it started out with, but I've accumulated a lot of shares. And again, here's the actual account. It started in August, and you can track it back to when I was on Liz Clayman on it was either the last Friday in August or last Friday in September. I said, Liz, the market looks like crap. It's going lower. If I'm going to buy anything, I'm only buying the indexes. Okay, that's what I want to buy now. I don't want to buy. I'm not trying to be a stock picker right now. I'm going to buy the indexes. I know I'm going to hold them. I'm going to hedge them. And that account started with 100,000. This is today's value. It's going back from last August. Okay. So 13% gain versus how much is the market down since then? Okay. This is one of my live accounts. Great day to be hedged. Thank you for all you do for us. Well, listen, I love doing it for you. Again, that's my thing. I want you guys to make money. Okay. I'm going to skip this one. It's just somebody who sends me in their overall portfolio. Corrections happen all the time. Okay. Again, you should get a 5% about 3 times a year. Now, we've had an AB normal market reference to Young Frankenstein. But again, we still get these corrections no matter what. They still showed up. Okay. At some point, you get the sauce. They're natural. And what we have now should happen every few years. It has not. We've escaped it, but have we escaped it? So if you go back to COVID, no. December, the Black Christmas of 18, no. So maybe we haven't quite escaped it. But again, we don't remember it because the reversals were so fast. This time, not so much. I don't think we get such a quick reversal in markets this time, but we'll see. Okay. Keep your head in the game. That's the thing that I look at. Keep a long-term perspective. Okay. Good companies that are going to be in business, figure to be in business years from now. Okay? Never let tax considerations affect your strategy. Okay. Don't panic when the market falls, and please, whether you become a member or not, do not sell or puke on the opening of any market. I'm begging you, as somebody that I may not know you personally, but I'm begging you that you will do better if you at least take a deep breath and let the markets get their footing back. Those who panic and puke on the opening are always losers. They have no chance. Okay. You cannot outsmart the market by timing trades. It can't be done. Trust me. I've tried. Maybe a couple $1 million worth. But nobody cares until it's too late. That's always the case. Look, human nature is human nature. And if you can get above it and rise above it, you give yourself an opportunity to be much better than the rest, which is what I pride myself in, that my members know more about options when they're done than 95% of the trading world. Okay. Look, you got to understand the markets go through phases. Okay. And learning how to read these phases, which we'll teach in class as well. This is by far, in my opinion, the best indicator that there is.
Markets go through consolidation about 65% of the time. They chop around. They don't go anywhere. Okay. Terrible for trend traders, miserable for everybody because they don't go anywhere. Eventually, they have to break out to a trend one way or the other. They do. And eventually, usually you'll see a blow off, panic, either the FOMO chasing him up or the fear pushing him down. But either way, you see the phases that show up, and they show up over and over again. In fact, I'll just show this with you real quickly. Okay. This is what we do every day with my members from 9:30 to 10:30 Eastern. Here's 4-minute charts. What are we doing? We're shading the phases of the market on these 4-minute charts. 8 products, 4 minutes each, 4 and 1 we use. Okay, 1 for a trigger trade, but again, a little more complex. But in the meantime, beta weight your current holdings, which will create your own mutual fund. Now, again, you can, with our design, you can hedge each stock individually, which is preferred if you can. It makes it cleaner and easier. But again, it depends on the quantity that you have. And these are all things that we teach in the class, how to do it the best for you. Because like me personally, most of my money is in mutual funds. Why? Because the SEP IRA that I own, okay, the plan that I have does not allow me to do other things. Believe me, I would be invested in stocks. I hedge it, okay, and I have to hedge it in cash because where it's held, they don't have options, but I don't care. I'm happy to do so. But my point is that everybody's gonna be different, and I don't want you to change your entire portfolio because you became a member of my system. I will work around your system because I can work around anything, and you will understand and learn where is your best fit and what fits best for you, because it works for everything, but knowing how to do it is what really cares about. But just a quick basic, if I were going to do a hedge and I had 100 shares of the spiders, okay, I would do a 1/2 back ratio, put back ratio spread, okay, $2 apart. This would cost me, and I'd be going to September. You can hedge weekly if you want, you can hedge bi-weekly, but you'll find out that the best value for you is to go quarterly, because the sum total of option premium of the sum total of the weeklies is always greater than the monthly, and the sum total of the monthly is always greater than the quarterly, which means you're paying less money. Now, it happens to be that we're in a cycle that we're rolling forward anyways into September. So this would be put in September. Okay, so for the next 130 days, or whatever it is, it's $2,150 to protect $40,000. Okay. And that is with no movement. That was nothing. That is not getting any of the benefit, but that is straight raw protection. Okay. Now, the amount we're hedging in this case is $3,900. The cost of protection is $2,150. The enhanced yield, we don't know, but we will get an enhanced yield over time. Okay. Our yield will enhance over time. But again, there's so many factors and options. If you understand options at all, there are a lot of factors that change, right? Implied volatility, premium, the whole story changes on a regular basis. So I can't, and I don't like to give protection anyways. Okay. I know it works. I know how it works, and I will teach you that, and you'll see the benefit for yourself. But if you want to look at what absolute protection comes in, so what is it? So the SPY is trading at $390. It cost me $2,150 or $2,150 to protect it. So my real absolute protection comes in at $366.50. Okay. Which is 5.51% risk. So that's my absolute. 5.5 per one. If I own 100 shares of the spiders, 5.51% is my 100% worst I can do. But again, we forget that that's not the worst I can do. Better. I can't do that bad, because if it goes down that far, what am I going to do? I'm going to roll down my hedge, re-hedge it at a lower level, and buy stock down there. Okay. So I'm going to add to my portfolio as it's going down. The markets are expecting, based on current volatility, a 25% move between now and September. I'm risking 5%, and I'm really not risking it, because if the markets go up, I make a little bit less, but I'm making money, and I'm going to roll up my basis and lock in a higher price. The market tanks, I'm going to buy more shares on the way down. So when I get the big rally, I'll roll it back up again. So again, I give you absolute just based on math, but there's so many factors that it could never be that bad. Okay. And most of you have taken more than the 5% hit. So again, I understand it. The key is what? You're always buying, right? Every dip we use, myself personally, I use 3% down, 3% up.
My stock goes down 3%, the bigger ones, I roll my hedge down and buy some more stock. Okay, it goes up 3%, I roll my hedge up. I can't buy any more stock. I haven't created a credit, but I've locked in a higher basis for the next sell. So it becomes a routine. Now, again, that all gets automated, okay, which is the most beautiful thing about it. And we auto trade through Tradier, and we will soon have, for those that are out of the country, interactive brokers. When exactly, I don't know yet. And I'm not going to force Tom to give me an answer. He will get it done. He's as anxious to have it as I am, but it's, anytime you start a project, there's always things that happen. But trades are done to your own specs. You pick what you want. I teach it to you. I'll give you what is mathematically the best. From there, you do your thing. Okay. The software works in your preferences. We will give you what is the best based on history and math. But if you want to change them, feel free. Once you've set up your portfolio, the software will take over. Now, Tradier Brokerage, who's our preferred partner. I have other brokers, just full disclosure, but Tradier is $10 a month flat. Our software is a fee of $150. You get a 4-month free trial if you join, but it's still lower than your brokerage cost that you'll be using, even with like so-called the free brokers. Okay, but Tradier is $10 flat. Okay, now this was the original portfolio that I showed you earlier. Okay, it was 500 each, but again, you can see I accumulated shares. So I sold some of the shares to create some cash because I'm using a dramatic amount of leverage here. But again, I have enough cash to handle it, and I'm always experimenting with different things for my own members so I can teach them what the best way to do it. But now that's the portfolio then, and here's the portfolio now. Okay, so I've now added significant amounts of shares to my account, and actually I've added a few new pet projects. Square, Coinbase, and Win. They got hammered so much, I'm willing to gamble a little bit on those. Okay, but I'm hedged, so I'm really not gambling. I'm protected. Okay. Now, this is actually an example of a roll that happened yesterday. This was done automatically by the software. Okay. It rolled my hedge from 77.50, 80 to 85, 82.50 on the rally. Okay. So I didn't buy any more shares. I paid a little bit for it, but I captured a higher basis. So either it goes higher and I continue to make more money, or it dips back down and my hedge kicks in faster. So I get to buy more shares on a dip on the way down. Okay. This is the Qs. Also happened yesterday. Okay. That I bought more shares by rolling the hedge. I actually used the credit that I collected to buy 11 more shares of the Qs. Okay. And again, remember, that's our objective. Our objective is to stay in markets always, okay, in our investing accounts. You have made the complicated and impossible understand and attainable. I can't thank you enough. You're truly amazing. Oh, thank you. I am. No, just kidding. Thank you. A big part of living the life you want is taking ownership of your choices now and in the future. And again, this is something that I talk about all the time. If you want to be with me, you got to take ownership. You got to take ownership of doing the right things, of following the rules, understanding it, learning it, not depending on someone to wipe your tushy. You got to be prepared to do it yourself. Do something today that your future self will thank you for. Okay. That's what you're trying to do. And I get hundreds of emails of people that have been through this. And again, I asked you the question earlier, how would you like both protection and potential? And how'd you like the benefit of compounding without stressing with the markets? Okay. And I just got this week, and I thought this was the greatest. Okay. I can't tell you everything about this person, but it's the greatest. Tom Todd, the hedging software is just amazing. My only complaint is, why didn't you start earlier? Just kidding. My regret is, why didn't I start earlier? And that is usually the case. We have many that regret not starting early enough. But again, it's never too late to protect yourself. That's what you got to remember. Okay. It's never too late to catch up. We have methods that we can have you accelerate your portfolios as well. So again, the question is, are you ready to take control of your financial future? If not, please don't join. Okay. Again, I don't want you to be here if you're going to be miserable, unhappy, okay, and not do your part, your fair share, which is part of the homework to learn it, because I teach it extensively. Okay. It's 8 sessions. Okay. That used to be 5 sessions in an hour. It's now 8 sessions at 90 minutes. Okay. So I have no patience nor time for whiners and complainers that don't want to put the work in. Okay. But I'm going to offer you right now The next class is starting on May 31st. Now don't go anywhere because I got more. And I'm going to answer any one of your questions. Okay. Learn to hedge and compound your portfolio. Protect, prosper, and relax 8-week course. I teach you all the tools you need and then some. Plus the fact, guess what? You get a lifetime membership. Okay. You can come back to every class that I do. I've got people that have been coming for 10 years. They never missed a class. And what's the benefit of that? Well, markets are ever changing. So you get a better understanding. And of course, so is the option world is ever changing. When we first started, we didn't have weekly options. Okay. I teach you everything. Teach you how to do it. You have access to the software that automates it. Normally I get 3,500. Today is 3,000. It includes 4 free months of the software. It includes the Monday night strategy call, and it includes 1 year of Day Trader's Dream, a brand new product we brought out December 3rd. But if you want to become a member, BubbaTrading.com/hedge. It is BubbaTrading.com/hedge. And for those who don't remember, don't know about that, here's Day Trader's Dream. These are live results as of yesterday. Okay. We have 2 models, a standard and an aggressive. Okay. And they're both up nicely. And the real difference is one trades about 10 times the size, which is why the results are so skewed. And just for full disclosure and clarification, every lawyer is going to say this can't be done, but I don't care because here it is. My stuff is copyrighted. Okay. This is from the United States Trademark Department, the government, not me. Okay. So this program, this hedging is actually copyrighted. So, or whatever you want to call it, trademark. All right. But again, you want to protect yourself. Are you ready? Or do you want to sit here and regret it later that you sat around and lost all your money again and are wondering how you're going to retire? How are you going to take care of yourself? Okay. And I'll be happy to take any questions that you have as well. Okay. So it's BubbaTrading.com/hedge. I'll leave this up at questions. Fire in. If you got them, I'll be happy to answer anything you want. You can ask me just about anything and I'll answer. But again, it's up to you. You want to go through the hell of what's happening? I mean, this is just the beginning. They don't talk about half this stuff. Okay. You don't hear about it on TV. They're not getting into it too heavily about the food shortage, about the lack of workers, the hiring freezes at tech companies. Now, those are big paying jobs. Okay. All right. Well, again, if somebody has questions, then I will kiss you all goodbye and tell you to have a great weekend. Hold on. Ask anything, who's going to win the PGA? Well, I don't have the winner. Scotty Scheffler is what I liked. I do have, but all my guys except for him made the cut. I'm hoping Lucas Herbert. He's the biggest long shot I got left. But I'm assuming it's going to come from, the top 5 or so. I'll put it this way. I don't think Rory's going to win. How's that? Anyways, it's BubbaTrading.com. I know some of you have mentioned you're having some problems. Hey, if you have a problem and can't get in, just email me. I'll send you a hard link. Okay. But again, I want to make sure that you're fully in understanding, because the bottom line is it's my goal to protect everybody. It's my goal to educate. That is why I put a program in high schools, okay, that I pay for myself. I do get some help from people on Patreon, but overall, I put the bill myself. And of course, I have to redo it because, you think it's hard, selling something, try to give something away. Okay. But let's see here. You got it, brother. Love you too, darling. Thank you. I am the best. I try. Listen, I work the hardest. I might not be the best, but I try to give the best education to everybody because I think it's that important. Okay. Again, I'm a big believer in the importance of people learning and understanding how to fend for themselves and how to take benefit of all these market meltdowns that do happen over and over again. Okay. Thanks, Bruce. I appreciate it. Listen, I work hard at it, man. Again, Saturday morning, I'm here. I was at the club. The recording is going out shortly. Yes. Now, the Day Trader's Dream part, the giveaway, which is $1,000 value at current, it's really a $2,000 value, but I'm going to offer it on a special at $1,000. Okay. That expires tonight. Okay. That part of it expires tonight. Okay. Look, here's the bottom line. Either you want in or you don't. If you don't want in, no problem. No harm, no foul. I hope I gave you enough information and a good education, because that's my goal anyways. I don't mind teaching people, but if it's for you, great. And if it's not, okay, then hey, it's not. No worries. Again, no hard feelings. I don't get mad at that stuff. Okay. I get mad when you don't learn. Okay. But at the end of the day, please, if it works for you, it should. I mean, I've never had, any problems. And of course, I've been doing it myself basically since I started trading, because this is, believe it or not, this program is a derivative of what we did every day on the trading floor. Thanks for the presentation. If you are trading stocks and not synthetics, do you ever buy them on margin? I have. I try not to. Love the strategy. How long does it take to recoup the cost of the course? Well, it really depends on the market. Okay. Look, how big is your portfolio? How big is your portfolio? What does it consist of? Recoup the course, the next sell-off, next week, probably. Okay. Again, and by the way, before you run, okay. Somebody asked me a question, very good friend of mine said, I don't want to wait 8 weeks. I want to get done now. Well, we're going to start the class a week from Tuesday. And I assure you that I can help all of you, if you're going to auto trade it, get set up and running long before you know the entire course. Okay. So don't let we're not going to miss a thing. We're going to be ready and rocking and rolling when it's time. Okay. I'm very protective of my members. Okay. And you ain't going to miss nothing by me, baby. Okay. In a $5,000 account, it'd take you forever. Look, if you're only hedging $5,000, okay, and you have no other holdings that you want to hedge, this is not the right program for you. I'd love to have you, but I don't need the 3,000 bad enough to take it from you. Because if I take from 5, you got 2. What are you gonna do with that? You can't make money. You're never gonna make money. If with 5,000, you can't buy this program. You got to have more. Okay, you don't have to have a lot more, but you don't even have any prospect of more. You know what I'm saying? You don't have an opportunity to create even my synthetic model with $5,000. Okay, because again, remember if the course is 60% of your holdings, how are you going to make money? And I only want you to have the opportunity to make money. Okay, you are not only the president, but you're also a cost customer. Thanks, brother. I appreciate it. Again, so if with $5,000, you can't do it. Look, I wouldn't recommend anybody do this with less than 15 or 20. And then it would depend on who you are and what you're trying to do. But I'm going to assume you're taking a whack at me and asking me with 5,000 and you got more. Okay. I don't think, unless you're very young, again, I have no idea who you are. I know your name. I don't know if that's your real name. I know your name. If you're telling me straight, that's all you got is $5,000, you better find better places to go. You got to grow that faster. And it's harder to do it with me because you don't have any capital. You have no flexibility. So I'm sorry. As much as I would love to have you as a member, at $5,000, I can't take you. Okay. So, all right, kids. Well, I appreciate your time. It's Saturday, I understand, but it's always good to share. And I do love to educate all of you. Again, I do a lot of education just on my own, right? And Monday night strategy call, I do an hour before the call starts. I did an hour today before it started. Okay. I'm just trying to educate you. I want you to be at least financially literate, because this country does not teach literacy. Okay. They teach ignorance. And that's how, believe it or not, that's how the whole high school program started, was when my kids were in high school, and they were in the #1 high school in the state of Illinois at the time. And then they told me what they were learning. I said, are you nuts? And I've written a couple of books. So I did that. Do I have other educational materials that you can show us and how to work with 5? Yeah, I have things you can do with 5,000. Okay. But this ain't it. Okay. And the truth of the matter is, we had some $5,000 portfolios that we used, and they're okay, but they're riskier. Again, your risk of ruin is way too high trying to trade with $5,000. You want to day trade futures? That's your best option. Okay. Because you get to trade with day trade margins. Okay. And you're taking, basically on a trade with the micros, you can take $15, $20, $50 risk on a trade. Okay. So you can trade that. You can try to grow it from there. But the only way to really do it is to day trade futures using micros, because you get reduced margins. You got to be out every day, so you don't have the overnight risk.
So yeah, I mean, again, listen, I got things for everybody, and I can teach everybody everything, but I never want to have people come in that on short capital. Now, $5 grand is fine to day trade. Okay. But it's really not good for much else. Okay. So I'd be happy to talk to you about it and set you up. But again, I always worry, believe it or not, I worry more about my members losing money than when I lose money, because I've done it so long. I've had plenty of drawdowns. I get it. I don't worry about it. I know I'm going to make money. Okay. But at the end of the day, I worry about you guys. So you got me in your corner on top of everything else. So, all right. Well, enjoy. If you're a basketball, hockey fan, you got that today. You got PGA, you got baseball. You got everything. You got the World's Fair. Okay. So in the meantime, have a wonderful weekend. I appreciate you coming, and I will send this recording out. And if you want the pregame, email me at bub@bubbatrading.com. If you had trouble with the link, email me at bub@bubbatrading.com. I'll take care of you. In the meantime, thank you so much, everybody. I appreciate you, and we'll see you next time around the neighborhood. Hopefully I'll see you on the 31st, because if you didn't take those warnings I gave you, I don't spin that crap very often because I don't believe in it, but I do believe in the real trouble we're having. And if you didn't take those warnings, you're going to continue to run naked. God bless. Have a great weekend, everybody.